Palantir stock can reach $1,000 per share. PLTR stock price targets, earnings prediction, and analysis. Hey there, investing enthusiasts! Welcome back to our channel, where we share all the latest stock market buzz. Today, we've got something super exciting to talk about. Palantir Technologies Incorporated and its potential to reach an incredible $1,000 per share. We're going to explore Palantir's stock price and what the future might hold. Can it really go up to $1,000? We've found two articles that have some interesting thoughts on this. The first article looks into the reasons why Palantir's stock might go up a lot. We'll check out their ideas and see if it makes sense. Then there's another article that suggests Palantir could keep rising. We'll see what they're keeping an eye on to support their positive outlook. So if you're curious about whether Palantir can reach that impressive $1,000 stock price, stick around. Don't forget to like and subscribe to our channel for more exciting stock predictions, earnings analysis, and market updates. Alright, let's jump right in and uncover the thrilling possibilities for Palantir stock. Palantir can continue higher. This is what I am watching. So, Palantir has been having a fantastic year in 2023. Their shares have been soaring like crazy, up by an incredible 182.47% since the start of the year and a whopping 143.59% since May 5. Impressive, right? And guess what? They're about to announce their Q2 2023 earnings on August 7. Investors are eagerly waiting for that. This year, Palantir has been busy expanding its partnerships. They've made quite a few official announcements and even more blog posts discussing their work. We've been keeping a close eye on these developments as they give us insights into what will be discussed during their earnings call. We are pretty optimistic about Palantir's growth prospects because they've been striking significant deals. They've partnered with government entities in Ukraine like the Prosecutor General's Office and the Ministry of Digital Transformation to help with defense and reconstruction efforts. They've also expanded their commercial partnerships with big names like Microsoft and Jacob Solutions. These partnerships are crucial for Palantir's expansion into different sectors. Now, when it comes to the Q2 2023 earnings report, we are looking for strong growth across the board. I mean, they've got to show growth in revenue, earnings, customers, and contracts. Oh, and let's not forget about their free cash flow or FCF margins. They need to maintain those too. Positive numbers in all these areas could mean good news for the company and its stock. Speaking of customers, we want to see Palantir increasing their customer count. More customers mean more contracts, and that means more opportunities for new business. Word of mouth is also essential in business, so happy customers sharing their success stories can generate a lot of buzz and attract more companies to use Palantir's products. Revenue is a big deal too. Palantir had some guidance for Q2 and the full year, so we're curious to see how close they'll come to those numbers. If they deliver at least $550 million in revenue for Q2 and continue to show incremental growth throughout the year, it would be a positive sign. The same goes for their operating income and profits. Palantir has been showing some profitability recently, and we're hoping they can keep it up. We prefer looking at a free cash flow or FCF margins because it's harder to manipulate than other profitability measures. We're really keen on seeing their FCF margin being 33% or above. Now, why are we so optimistic about Palantir's future? Well, we believe they have the potential to replicate the kind of growth we've seen from companies like Salesforce. If they can continue to grow their revenue at a steady rate, they could be worth over $100 billion in the future. Of course, these are just assumptions, but it's why we think Palantir could be a good long-term investment. But hey, it's not all sunshine and rainbows. There are risks too, like the possibility of missing projections or not being profitable. Some people are still skeptical about their technology, so it's not all smooth sailing. We're crossing my fingers that they've underpromised with their estimates, so there won't be any nasty surprises. Overall, we're really excited about Palantir's upcoming Q2 2023 earnings report. We think it could help push their stock back into the $20 if they deliver good numbers. They have a lot going for them, and this quarter is going to be crucial for setting the tone for the rest of the year. So let's see how it all pans out. Fingers crossed for some positive news. Can Palantir stock reach $1,000? So there's this intriguing article discussing whether Palantir stock could reach an impressive $1,000 per share. In one recent move, Karp published an essay in the New York Times titled "Our Oppenheimer Moment: The Creation of AI Weapons." He's arguing that the United States should take the lead in developing artificial intelligence or AI technology, especially for military applications. It's all about ensuring that the US doesn't fall behind other countries and end up at a strategic disadvantage. And there's more. Palantir has been actively engaging with the National Telecommunication and Information Administration, or NTIA, an AI accountability policy. They're pushing for AI policies that consider specific contexts and prioritize enhancing human decision-making, not replacing it. They also believe that uniformity in AI accountability requirements across jurisdictions will lead to better regulation. But it's not all smooth sailing for Palantir. Their partnership with the NHS has faced some controversy. While their data dashboard platform has been helpful in the COVID-19 response, there have been concerns raised about transparency, data security, theological clashes. It's got people talking about the challenges of public sector reliance on tech companies and the need for transparent and accountable processes. Now let's take a look at the positive side. Palantir's Q1 results were pretty impressive. They've been profitable for 2 consecutive quarters and expect to stay that way for the rest of the year. Their CEO, Alexander C. Karp, is thrilled about the demand for their new artificial intelligence platform. And just look at those numbers. Their total revenue grew by 18% year over year, and they've got some serious growth in the US commercial and government sectors. Palantir's net dollar retention rate is also impressive, sitting at over 100%. That means their customers are spending more this year compared to the previous year, indicating customer satisfaction. And let's not forget their high gross margin, consistently above 80% for the last 4 quarters. But of course, there's always a bear case. Palantir is still predominantly a government contractor, and that comes with some risks. They've got some large government contracts up for renewal in the next 15 months. And if even one of those contracts falls through, it could put a damper on their revenue growth and profitability projections for 2023. Analysts are saying that Palantir's growth trajectory could be quite bumpy in 2023, depending on those contract renewals. Additionally, with agencies like the US Army, Air Force, and Special Operations Command looking to develop their own open-source solutions, it could pose a challenge to Palantir's future growth. So back to the big question. Can Palantir stock really reach $1,000? Well, as of now, they have a market capitalization of $34.8 billion, and with their current 1-year sales change at 23.61%, it's not exactly a cheap valuation. Compared to other companies with similar sales growth, it seems a bit pricey. The article does provide a projection for revenue growth in the coming years, which could potentially push the share price up to $15 to $20 if everything aligns. But remember, investing in Palantir is not without its risks, although it does have promising prospects for the future. Palantir stock reaching $1,000 is an exciting idea, but it's essential to consider both the positives and negatives for the company before making any investment decisions. The road ahead might be a bit uncertain, but that's what keeps things interesting in the world of investing.